You launched a line in September 2021 when KOSPI was sitting around 3,000. This June in 2026, it went above all-time high of 9,000.
Still, 71% of KOSPI is trading below book, and those stocks trading average less than 0.5 times book. And KOSPI is 9,000.
Tell us about the moment, how you generate the idea, and at what point in your engagement you felt that, okay, we have a real chance at this.
So I already knew the core of this K-pop business, which is really loyal fans to the brand and the artist. This goes lifetime. I didn't expect that I'm gonna achieve the 100% of my goal, which was terminating this contract.
How should global investors view Korean capital market right now? Because the KOSPI went up so quickly, so much, how should they view it right now, and how should they view Korean market going forward? Today's guest is Changhwan Lee, founder, CEO, and Chief Investment Officer of Align Partners Capital Management. As one of the leading voices behind South Korea's corporate governance reforms, Changhwan helped to reshape the conversation around shareholder value and capital allocation. Today, we'll explore what's driving South Korea's capital market transformation, the opportunities ahead, what investors around the world should be paying attention to. Let's begin. Hello, welcome back to Pine Speaker Series. Today, I'm very happy to be back to Seoul to interview one of the most respected entrepreneur and investor in South Korea who has led the term around the commercial act reforms as well as activist hedge fund in South Korea, and someone that I'm proud to call a friend and a mentor. Welcome to Pine Speaker Series, Changhwan.
Thank you for having me.
Yeah, if you could introduce yourself to our audience.
Sure. Hello, my name is Changhwan Lee. I'm the founder, CEO, and CIO of Align Partners, Korea-based activist hedge fund.
Okay, so you launched Align in September 2021 when KOSPI was sitting around 3,000. This June in 2026, it went above all-time high of 9,000. Let's strip away the index number. What actually changed structurally in the Korean capital market between the fund you launched in 2021 and the one you're running in now in 2026?
So no one ever imagined that the KOSPI would really quickly hit 9,000 like this. But frankly, this is actually not driven by the corporate governance reform that I always advocated. It's really the AI, the infrastructure trade that's happening globally right now in a massive way, helping some of the beneficiary companies like Samsung Electronics and SK Hynix, which isn't necessarily a bad thing though. I mean, it's really helping the economy of Korea. GDP is growing very fast and the earnings are trickling down actually to other participants in the economy. But the rest of KOSPI is still very undervalued. Actually, more so. One stat that I want to give you is that still 71% of KOSPI is trading below book, and those stocks trading average less than 0.5 times book. And KOSPI is 9,000, right? So I think from market-wise, I think it's really not too much different from undervaluation and attractiveness of Korean companies. But what's really different is the upgrade in the regulatory and the legal environment. So when I first started in 2021, that was right after the National Assembly passed what we call the Fair Economy Act, which included really basic, fundamental, but not too big of a upgrade in minority shareholder rights. It included the 3% rule, which is a very unique tool that exists in Korea that provides some potential for minority investors like us to have a representation in the board. Now, the past 4 or 5 years, huge change happened, including the 3 amendments to the commercial code for the last 12 months, and more reforms are coming. So it's really shocking actually to me that things can change this fast. And what's more exciting is that the behaviors of the companies haven't changed any meaningful way. So the opportunity right now is even bigger and more exciting than 5 years ago.
Related question for that is, with KOSPI hovering around 8,000, 9,000, and with 3 amendments already passed, if you were to start a hedge fund over again, if you were to start Align Partners today, would you still use the same strategy, same playbook, or would you choose a different strategy?
Well, I think because more tools are available, I think the strategy naturally adapt to the environment. So right now we have more tools. So in the past, when I started, really the only strategy that I could do was to potentially run a public campaign against the company, having one maybe board representation using the 3% rule, and potentially litigate against the management. That's really literally the only tool for activism in Korea. Now we can play a much stronger and better game at way big companies with the cumulative voting and the expanded 3% rule and the fiduciary duty of directors all being effective starting this month, actually, as we speak. And some of the rules around M&As are also improving. So we are contemplating using more of a M&A angle in our investing, especially in the small to mid cap names. So yeah, but it is essentially the same strategy, but we just have more tools available. That's why you will see different and variety of the types of plays that we're gonna show to the investors.
So I want to take a step back. As a Singapore-based multifamily office that allocates to top-tier managers like Align, I'm often asked the question: how should global investors view Korean capital market right now? Is a one side much improved governance reform thesis one hand that's being played out? We've evidenced by 3 commercial act reforms, and with March this year, with a lot of AGMs, that there have been a number of share buybacks, higher paying dividends, just allocating capital more efficiently for the benefit of the older shareholders, number one. And then at the same time, there's AI semiconductor rally that's happening. So how should a global investor be looking at Korea right now? Is this two things running at the same time? And if they were to come into Korea, should they choose both, or is it combined? Like, there's a lot of question about because the KOSPI went up so quickly, so much.
Yes.
How should they view it right now, and how should they view Korean market going forward? Yeah.
Well, the short answer is that right now there's only one actually driver of the market that's playing, which is the AI rally. The corporate governance driver is not really playing at all, if I put it more simply, right? So these potential beneficiaries of corporate governance reform is trading lower than before. So that's really the balloon effect of the AI rally. So although these ex-AI beneficiaries, KOSPI, are at a better situation than before with this reform in the law, because people want to invest more in AI beneficiaries, they are selling non-AI companies to fund their investment in. It's even sometimes I heard some of the investors are shorting KOSPI X, Samsung Electronics, and SK Hynix to fund their investment into these two names, right? So that created a dislocation. So I think these are interconnected, and depending on the type of investor, this actually presents a very unique opportunity to invest in the corporate governance, actually the story, which could be much more long term than the AI infrastructure cycles. I think AI infrastructure investment is real. That it's not a just short cycle. I think it's a long-term secular trend and upgrade of many of the companies in Korea, including the semi names. But that is for those investors who are very familiar with technology, and that's that area. But I think I'm more of a fundamental driven, corporate governance related, focused investor. So we just play in the circle of competence. That's how I put it. Yeah.
I want to move away from macro question to more about Alliance strategy, Alliance processes. Align is not the first activist fund in Korea. There have been actually a number of attempts by foreign activist hedge funds that are very well known, that had a lot bigger AUM at the time that they engaged with the Korean listed companies. An examples could be the Sovereign that engaged with SK back in 2005, Elliott, who has engaged with Samsung C&T and Hyundai Motor in 2018, 2019 respectively. Much larger, better resource funds than Align was in 2021, 2022. So what are your views in terms of the differences between those cases in the past and what Align tried to accomplish when you set up your fund in 5 years ago?
I think the biggest difference is the overall mood of the general public. In 2005 or in 2015 and even 2018, Koreans were not investing much in the local stock market. They've been investing in more of a real estate. And there was not much information available for global standard corporate governance and shareholder rights. Local media didn't cover it. They're under influence by chaebols as well. So, and which ultimately influences the politicians as well. So that's why it was harder in 2005, 2015, and 2018. But also, I think what's also different is really the local expertise. So we are fully local Koreans, and we fully understand the local context. So not only that we can benefit from being Korean, so which gives us better PR angle in terms of campaigning against companies. We don't get to see these type of headlines where the greedy foreigners attacking Koreans, right? So we are Koreans actually raising issues in Korean way, but also we actually truly know more about the Korean context and the Korean regulation, better network. We have access to better pool of probably potential director candidates, auditor candidates, management candidates. Sometimes we know some of these people, and at the companies that we campaign against, all of these give very meaningful edge. It's still very hard to unlock value in Korean companies, and that's why you see that the local, especially us, can have sustained advantage in doing this.
Okay, so I want to bring ourselves to an actual case study.
Yeah.
Your first case study was in SM Entertainment.
Mhm.
And if you could tell us about the moment, how you generate the idea, and at what point in your engagement you felt that, okay, we have a real chance at this, and eventually got made into Harvard Business School case study, probably because it was really difficult or never really been done before.
Right.
If you could shed a light on your lessons learned along the way.
Sure. Yeah. So I myself was a K-pop fan as I grew up. So I think the history of SM really overlapped with my life growing up. So I already knew the core of this K-pop business, which is really loyal fans to the brand and the artist. This goes lifetime. So unlike maybe investors' perception that these are hit-driven, maybe very volatile earning stream. In fact, I knew that this is very sticky, actually, revenue, pretty visible and forecastable earnings growth, and a very high cash conversion, and it could also scale globally. It's very unique to Korea as well. To produce this type of products, you need this entire cultural context to do so. That's why you only have this in Korea. Having said that, so as I set up a line, so I wanted to invest in obviously sectors like this. This is long-term investable sector that I thought. But then the problem was that was already after BTS showing some signs of global success.
Yeah.
And that was during COVID. So the valuation of these entertainment or high growth sectors were very high. So I was scratching my head, what would be the best way to get exposure to this sector? And then I found SM, which was trading half the valuation of JYP in terms of EV over EBIT. And I was trading probably 1/10 of valuation in terms of EV sales compared to HYBE. So yes, SM probably is worse off than HYBE in terms of the global presence, and JYP has very good, clean corporate governance. But I thought it's actually easier to buy, company that is cheaper and catching up the others, especially given that their core competitiveness was okay. It was just the founder actually exercising outsized influence over the board with his 19% stake and taking disproportionate large amount of profits to himself without paying any to the rest of the shareholders. So this make a perfect target for investing in high quality company for long term and potentially engaging with the company to make some improvements. So I thought that by running campaign, my going in thesis was we can probably reduce the payment to the founder, which amounted to roughly 6% of revenue or 30% of profit, which is quite meaningful. So maybe, I don't know, it could reduce it down to 15%. That's already a win. And that could entail improvement in valuation multiple, which is the half of the peers. So yeah, we did the screening, and because we look for a high quality company that could last, a good cash conversion, good market position, and angle to unlock value with our engagement. So that's why SM was our initial target. And then, so I think it played better than I expected. We were able to win the first AGM massively, 80-20. So we were able to put our statutory auditor, Mike Kwok, into the board, and he did a superb job investigating the matter with the founder, which ultimately led the management and the board actually make the big concession and announce that they will terminate the contract with the founder. And yeah, I think this is such a meaningful case in Korean activism history, because this is the first case where activists achieved exactly what they wanted as they go in.
Yeah.
Even I didn't expect that I'm going to achieve the 100% of my goal, which was terminating this contract. And that's why I think, and also it's a high profile, right? Because it's K-pop. So that's why I think Harvard was interested in writing about it, because maybe it's educational for the students.
Yeah. Related question, the second case study that I'm very interested in is what you did next after a massive success with that same case, which was you engaged with Korean banks. And you not only engaged one bank, but you sent letters to all banks that are listed in Korea. So can you walk us through what are the rationales for this next engagement? And why you engaged all the banks, not just one? And K-pop and banks are entirely different industries. What are the same strategies you implemented from your first success? What are some things you did differently in this second case study?
Yeah, so as a finance guy, I generally like finance, and that's why I always had interest in following the financial stocks. I'm not a sector or any industry expert. I always have been country coverage generalist in banking and private equity. But the commercial bank business is not a rocket science. It's everywhere. It's been truly traditional, very established business model. So you don't need to be super smart to understand this business model. But then it was very shocking. Even at KKR, I had a chance to review some opportunities to invest in some of these banks, which ultimately didn't happen. But it was very striking. Like these stocks trade at 0.3 times book and 3 times PE. And it's growing. I had a chance to study and interview some of the investors. Why is the case? It's really because very poor capital allocation. So business is great. They could do better, but it's not bad. It's oligopolistic, protected. They make the stable profits, but they only were paying roughly 24% of their net income to their shareholders. And every bank was the same. It was because these dividends are not entirely independently decided. It's really, there was some influence by the government. Everybody knew about this, but because maybe some foreigners may have thought about engaging with the banks, but because the foreigners cannot engage with the government, and they don't know about the real detailed context about it, probably I think no one ever tried. Going against the government is not an easy thing to do, right? But living here for more than 30 years, right? So growing up, many of my friends are actually working in some of these regulatory bodies, and we know exactly what it is as Koreans. The reason why regulatory bodies were guiding towards payout less than 30% for the last 30 years was not because they don't like dividend. It was really because nobody at the regulatory body wanted to be the first person approving payout above 30%, because that was the practice since the Asian financial crisis. And if somebody approve it, right, then if something happens to the financial sector later, this person who approved the increase in payout will be summoned to the National Assembly and will be questioned, and that's how it is. So it's totally understandable, actually. So then we are solution provider. So what's really important for the regulators is that they also don't like to be blamed for this undervaluation of Korean banks. That's not very good, right? I mean, if the companies are trading at 30 cents a dollar, you cannot issue any new shares. So, but they don't want to be the first person to approve a payout above 30%. So what could be done is that if we can come out with a strategy where all banks could maintain good capital ratio, but increase the payout ratio due to the activist demand, then what can happen is that the regulatory people, they have someone to blame.
Which is a line.
Right? So it's not them just approving without no reason. This, very strong activists demanding this, utilizing the shareholder rights. Theoretically, we can force this by winning the shareholder votes. And what we were proposing to the banks was not to just increase the payout. We also said you guys should reduce the allocation to loan growth, which will free up capital and use that to do the buyback. right? So it's not gonna deteriorate their capital ratio. So that's how I thought the problem could be solved, right? And that worked as I expected. So it's very detailed nuance and subtle nuance that as a local we know that we really played here. And the reason why we did this across all 7 banks is also that local subtle nuance. We already knew some of the bank managements even before setting up a line and talking to them. No one wants to be on the spotlight. Yeah, it's not gonna. Then if let's say if one bank, is do this, then the regulators also have some difficulty. They may have to put some pressure on this certain bank. But if this goes the sector problem, then no one is humiliated. No one. Then we can actually create even FOMO again amongst competition amongst these banks. So we mobilized the shareholders. We created competition among all of the 7 banks and help them save face and also help the regulator to treat this as a sector problem, not a company problem.
I want to ask about the AGM season this year, Changhwan, because to me, as an outsider, this March 2026 was a real testament to how these commercial act reforms really play out, both for investors like you, as well as listed companies. So, and there was a very interesting moment this year where we had to live through a war in Iran, where KOSPI had 19% decline, almost 20%, which is a lot in 1 month. And you were going through all these AGMs and you were doing not just 1 or 2 like you did with SM, but multiple at the same time. So now walk us through how March was this year for you. And what that AGM season taught you about a line and Korean capital market this year.
Yeah, so it was very important proxy season because that was the first AGM season after the amendment to the commercial code, where commercial code changes are not effective yet, but the companies are preparing for the revised commercial code, right? So they're trying to, build some defense with their attempts to change articles of incorporation. For us, so we obviously gained quite a lot of scale leading to the March 2026. So we invested in more companies. So 7 campaigns at the same time was the most number of campaigns concurrently that we ran. So it was a test of our capacity, how many projects we can handle at the same time. And I think we shown to the world very successfully that we can actually handle more than, 5, 6, right? We handle 7 with the expanded team that we built, right? We have the biggest and the strongest team with the best expertise and knowledge and energy to do this. So I'm very confident after that we have built the infrastructure, including the external advisors and the existing templates, because we've done 10 public proxy contests over the last 5 months. And so we now are gaining efficiency. Our efficiency is improving and we're repeating now our success. So I think it's a natural moat that we built around the strategy that we are the biggest now and we are the most skilled and experienced and do this in the most effective way. And we have the brand. So our strategy of investing in 10 to 15 stocks at any given time and engaging with all of them with a varying degree is totally doable. That's, I think, what I learned. And the Korean market, I think, is recognizing, I think, that the activists are going to be now a constant factor for the market, and they should really think through as a board, as a management, to make decisions.
Yeah. Talking about team, I want to ask you, because when I've known you for a long time, since we were students, analysts, when you started a firm. I've been coming back every time I'm in Korea, I visit you. You started with a pretty lean team at the beginning. Now you have a much bigger expanded team. How have you evolved from, say, more or less a one-person manager team 5 years ago, running a single campaign with very limited amount of AUM, to now 7 live AGMs at the same time in a single season, plus policy testimony at the National Assembly, your own published research reviewing the AGM season this year. How have you structured your organization operationally? And does your investment team cover all 10 to 15 names at once? Or within the investment team, do you have a sub-team that monitors these teams? I'm curious how you're building an extended team.
Yeah, so my personal philosophy of building an investment team is to have high density of talent. So when I started, there were 6 people. So 3 people in the back office and 3 people in the investment team, including myself. I had 1 associate and 1 analyst. Now we have 21 people, 8 in the investment team and 1 in the value up team that we recently created, and 3 in the capital markets, and the remainder in the back office. So as we have shown to the market that we can successfully actually execute on these activist ideas, which people didn't think that it's possible until recently, and we're repeating our success. We have now ability to hire from the top bulge bracket banks and the private equity firms and the top schools. So people want to come work here and be part of this, big wins, right? And so that's actually a good thing, right? And as we gain scale, we can compensate the teams better. So we not only we're keep increasing our compensation, base salary and cash bonus, and we're paying also the investment return linked like performance carry to the investment team members, and all based on my experience working in private equity, KKR. So we think we are getting more and more competitive in addition, in terms of compensation, in addition to the experience that we're giving them. And and so our team is very energetic, young, and global. That's very important because our competitors in local activist space are definitely less global than us. And so our teams, that's also a big edge because we can raise capital from international investors and we can interact with the global shareholders in our campaigns, and we can also do well in Korea as a local Koreans, right? So, and we cover the 10 to 15 stocks like as we do in private equity. So we have 2 VPs and 4 associates right now. We are in the process of hiring 3-4 analysts. So far the model was each company, there's at least one associate and analyst staffed. So average associate analyst staffed 2 to 3 names at any given time. And the 2 VPs split the portfolio 10 to 15. It's a metrics organization. So these analysts and associates cross-staffed with these VPs based on projects. This is how the investment professionals are staffed in private equity or investment banking. So we can cover definitely 10 to 15 stocks.
Yeah. You're still young, so I won't ask you about succession plan, but you're very much of the face of the company. You're on the TV a lot, National Assembly. Do you ever worry about key man risk? And have you been asked this question before? Because Changhwan is so central to Alliance overall strategy.
So I would honestly say this, right? So this is a single strategy, single PM hedge fund. We don't deny that. And I make all the final investment decisions. And so that's what Align is. And so to protection for our investors is this, right? So if something happens to me, I think at least the stocks that we own in our portfolio, those are all public and liquid assets. So we offer in certain downside scenarios, we can liquidate the fund and, we can liquidate in an orderly and gradual manner and pay to the investors. Obviously, investors may choose to stay with the fund, and the team, I believe, can at least carry on the existing projects even without me. Now that our brand is pretty established, and I think, as I mentioned, we are now repeating our playbook. So I think that, I don't need to, involve in every detail of our execution now. So which is a good thing. And I think as we spend more time with this firm, I think as we gain more scale, 2 billion, 3 billion, then I think, they will accelerate the institutionalization of the strategy and the firm. So I think the key man risk will be further mitigated by us getting more scale and the institutionalization.
Yeah, I want to ask you about the AUM because you've started with pretty much of invest LPs from Korea domestically, but you quickly went on to attract capital from leading family offices, institutional investors or around the world. Tell us how a 1 or 2 year old hedge fund manager go and convince these large institutions to back your idea, and you were able to grow fairly quickly. And what are some lessons learned in that process?
Yeah, it was totally a learning process for me. I haven't raising any funds in my previous life. So I only had to rely on the friends and family, right? Not family, friends, right? For my initial fund launch, it was 16 million initially. But my early success with the case at SM Entertainment definitely helped us a lot. And our second attempt at the banks also went really well. So these created our early momentum for fundraising, and that coincided with accelerating reform faster than I expected in the corporate governance related laws and regulations. So, and these days, Korea market is getting generally more attention from global investors. So I think there were some luck and some, I think, efforts and planning. We were happy with our investor base and the type of capital that we have. Very smart, sophisticated, patient capital base that we have. And we want to keep it that way, which is a key differentiator for us as well. Yeah, so we value long-term relationships with our investors and try to do best in that area as well. Really build trust for long-term. And this is essentially a long-term strategy, fundamentally, right? So
I want to ask you one last question about National Pension Service, NPS.
Yeah.
They're the big elephant in the room in Korean capital market.
Yeah.
They own 5 to 10% of almost all 90% of KOSPI 200 companies. They often hold a casting vote. They used to be fairly passive, but they're raising their domestic equity weighting while leaning more into stewardship code. As a private investor, private activist hedge fund manager, how do you see this change? And what is the knock-on effect on Korean capital market? Is it structural tailwind for a line, or is the ceiling on your upside getting minimized because MPS is essentially becoming or leaning more into the stewardship code?
So this is a huge help, huge tailwind. So until last year, NPS wasn't very active in supporting these stewardship efforts. They say publicly that they are doing that, but oftentimes we faced challenges from National Pension in our proxy contest. But this year in March, NPS supported 100% of our proposals, and they generally supported 70% of shareholder proposals this year. It's unprecedented high rate of support, and they are accelerating their efforts. So stewardship code is revised this year, and NPS is summoning all of the managers that they hired and challenging and pushing these managers to do better in their stewardship efforts. So NPS pushing managers to do that, and they themselves very actively engage with the company and exercise their votes more shareholder friendly. It's a huge game changer, and I think it's gonna continue to be like that. And it's a huge, I think, opportunity and advantage for investors like us.
Okay. We covered many questions, but if there's anything I left out, any comments, if you could share any lasting thoughts.
Yeah, I think that the world is changing very quickly. Yeah, and it's always very complex world. Yeah, there are always multiple drivers, but I think we focus on what we know best. And here, yeah, AI really is a very big thing, but I really think that Korea market is really poised for long-term re-rating driven by activist efforts. So it's a time to, I think, spend time with Korea market and the corporate governance team.
Okay. Thank you so much for your
Thank
time
you.
today.